Have you ever noticed how the fitness industry is one of the very few businesses that actually thrives when its customers buy the service and then never show up?
It is a fascinating business model when you think about it. If every single member of a gym showed up at the same time on a Monday evening, the facility would collapse under the weight. They count on the fact that a huge percentage of their members will simply pay and stay home. But what happens when the tables are turned? What happens when the customer wants to show up, but the gym itself has vanished?
That is exactly the nightmare scenario we are diving into today. It is a story that has been playing out in community groups recently, specifically involving an expat in Ho Chi Minh City. They signed up for a high-end gym called Elite Fitness in the Thao Dien area. Out of nowhere, the branch closed its doors. This person filled out a refund request form back in April to get their money back for the remaining days on their membership. Fast forward several months, and they have received absolutely nothing. The hotline is dead, the emails go unanswered, and the doors remain locked.
It is incredibly frustrating, and honestly, it is a situation that leaves you feeling completely powerless. You move to a new city, you want to establish a healthy routine, you trust a well-known brand, and you pay a significant amount of money up front. Then, overnight, the trust is broken, and you are left chasing ghosts.
It really makes you wonder about the risk we take on as consumers. We often focus so much on the excitement of starting a new fitness journey that we completely ignore the financial risks of these prepaid memberships. Why do you think we are so easily lured into these long-term commitments?
It comes down to how we view our future selves. Psychologists call it optimism bias. When we stand in a gym lobby, looking at the state-of-the-art equipment and the clean pool, we do not see our current busy selves. We see a version of ourselves that works out 5 times a week, eats perfectly, and has endless free time. The sales representatives know this, and they design their pricing to exploit this exact gap between fantasy and reality.
Right? They present you with a choice that seems like a no-brainer. A single month might be priced at a premium, say $100. But then they show you the 1-year or 2-year package, where the monthly breakdown drops by half. Your brain immediately calculates the savings over 24 months and tells you that choosing the monthly option is throwing money away.
Exactly. But that calculation only works if the gym remains open, and if you actually continue to go. The reality is that by paying up front, you have shifted all the risk from the business to yourself. You have given them a massive interest-free loan. If they run into financial trouble, or if they decide to close that specific location because it is not profitable enough, you are the one left holding the bill.
And this is not just a problem with small, independent gyms. We are seeing major, established chains facing these issues. When a branch closes, the parent company often tries to redirect members to another location. But what if that other location is on the other side of the city?
That's a classic trick. They say your contract is still valid because you can use another branch, but a gym is only useful if it's convenient. No one is going to drive 45 minutes in heavy traffic just to work out. They think they did their job, but you just lost your money.
It feels like a trap designed to exploit our good intentions. So, if we want to avoid falling into this, what are the concrete steps we can take? What should we look for before we sign anything or hand over our money?
First, don't fall for long-term discounts. Unless you're 100% sure the gym is financially safe and you won't move, stick to short-term plans. Pay monthly or quarterly. It might cost a bit more, but you're paying for safety and flexibility, just like buying insurance. If the gym closes next month, you only lose a few weeks of fees, not years.
That makes a lot of sense. It is about limiting your downside. But what if you do decide to go for a longer commitment? What should you look for in the actual contract?
Read the relocation and closure clauses carefully. Don't just trust the salesperson. They might promise a refund if the gym closes, but if the contract says you can be transferred to another branch, that's what counts. Always ask for a clause that guarantees a full cash refund if your specific branch closes. If they refuse to put it in writing, that's a major red flag.
It is amazing how often we gloss over the paperwork because we are in a hurry or we feel pressured by the sales environment. But that paperwork is your only legal protection. What about the way we pay? You mentioned earlier that the payment method itself can be a lifesaver.
This is perhaps the most important tool in your financial toolkit. Always pay with a credit card. Avoid bank transfers, cash, or direct debit. If you pay cash and the business goes under, you are an unsecured creditor. You are at the very back of the line behind banks, landlords, and tax authorities. You will almost certainly get nothing back.
But with a credit card, the dynamic changes completely.
Exactly. If you pay with a credit card, you can initiate a chargeback through your bank. You tell them that you paid for a service that is no longer being provided because the business has closed. The credit card company will investigate, and if they verify the closure, they will return the money to your account and reclaim it from the merchant. It is a powerful safety net that many consumers simply forget to use.
Are there any limitations to that? I assume you cannot just ask for a chargeback a year later without any documentation.
There are definitely rules. You need to act quickly, usually within 120 days of realizing the service is no longer available. You also need to show that you tried to resolve the issue with the merchant first, which is why keeping copies of your refund requests, emails, and any communication is vital.
It is interesting to look at this from a broader perspective. This prepaid model is everywhere now. It is not just gyms. We see it with beauty salons offering packages of 10 massages, or coding boot camps, or even prepaid meal delivery services. It feels like we are moving toward an economy where we pay for our future consumption today. What does that do to the relationship between the business and the customer?
It fundamentally alters the balance of power. In a traditional transaction, you pay for a service after you receive it, or you pay as you go. This keeps the business hungry. They have to keep providing excellent service every single day to ensure you return tomorrow. But when you pay for a year up front, they have already won. They have your cash. From that point on, you are no longer a source of revenue. You are a cost center. Every time you use their facilities, you are consuming their resources without bringing in new money.
That is a very profound point. It explains why customer service often degrades so rapidly after you sign the contract. The incentive structure is completely flipped.
It really is. And it raises a philosophical question about trust in modern society. We are asked to trust these institutions with our money, but they do not always reciprocate that trust. When things go wrong, they hide behind automated emails and disconnected hotlines.
It really highlights the need for us to be active, informed consumers. We cannot just rely on the brand name or the shiny facade. We have to look at the underlying mechanics of the deal.
Ultimately, the best defense is a healthy dose of skepticism. If a deal looks too good to be true, it probably is. If a gym is offering a massive discount for a long-term commitment, it might be because they desperately need cash flow to stay afloat today. And that is exactly when you should be most cautious.
That is a crucial warning. A sudden drop in prices or an aggressive push for long-term sign-ups can actually be a sign of financial distress behind the scenes.
Exactly. It is a warning sign, not an opportunity.
Well, this has been an eye-opening discussion. It is a reminder that protecting our health also means protecting our financial well-being. We hope the expat in Thao Dien, and anyone else in a similar situation, manages to get their refunds. But in the meantime, the rest of us can learn from these experiences.
Absolutely. Stay alert, read the fine print, and make decisions that protect your peace of mind as much as your wallet.
Thank you for sharing these insights today. And to all our listeners, thank you for tuning in. Keep asking questions, stay safe out there, and we will see you in the next episode.